Just a little introduction on the company that we're going to be telling you about today. The name of the company is Intel. The location is at Santa Clara, California, United States. The chairman of the board of directors is Andy D. Bryant. The CEO of the company, or the chief executive officer, is Robert H. Swan. The president of the company is Dr. Venkata Murthy. The two directors that work at our company currently is Anil Bursi and Omar Ishrak. Ernst & Young LLP is responsible for performing an independent audit of Intel's financial statements in accordance with generally accepted auditing standards. Along with that, they express their opinion on the effectiveness of Intel's internal control over financial reporting. Intel has a full-time internal audit department that reports to the audit committee and to their management. The audit committee has the authority and responsibility for selecting, compensating, and when appropriate, replacing Intel's independent audit firm. The audit committee reviewed and discussed with its management its assessments and reports on the effectiveness of Intel's internal control over financial reporting as of December 30th, 2017. In the 2018 annual report on Intel, Ernst & Young LLP states, "In our opinion, the consolidated financial statements present fairly, in all material aspects, the financial position of the company at December 29th, 2018 and December 30th, 2017, and the results of its operations and its cash flows for each of the 3 years in the period ended December 2019-2018 in conformity with the U.S. generally accepted accounting principles." One of the significant accounting policies followed by the company is the revenue recognition principle. All of their revenue is derived from product sales. Revenue for product sales is recognized at the time of shipment from their facilities to the customer's shipping location. In scenarios such as when sales are made to distributors that allowed for price protections or right of return until the distributor sold through the merchandise, they defer product revenue and related cost of sales. Shipping charges are also included in their net revenue and included related shipping cost in cost of sales. Another one would be the FIFO method. They compute inventory cost on a first in, first out basis, aka FIFO. Inventory is valued at the lower of cost or net realizable value based upon assumptions about future demand and market conditions. Valuation of inventory requires Intel to estimate excess inventory as well as inventory that is not of saleable quality. Other accounting policies that Intel follows include property, plant, and equipment, fair value, goodwill, loans receivable, etc. Just a brief history on the company. Intel is a company that leads in the design and manufacturing of essential technologies that power the cloud and the world. Intel offers evaluation, networking, data storage, and communication solutions to a broad set of customers spanning multiple industries. In 1968, Intel was incorporated in California and then reincorporated in Delaware in 1989. It became known as Silicon Valley, and Intel's technology they have to offer has been at the heart of casting breakthroughs ever since. Intel's goal is to build a smart and connected world that runs on Intel solutions. They are in the midst of a corporate transformation as they expand beyond the traditional PC and server. They plan to transform into data-rich markets addressing demand to process, analyze, store, and transfer data. With their data-centric business representing an increasing share of their overall revenue, the transformation is on its way to becoming a reality. Intel's mission statement is delight our customers, employees, and shareholders by relentlessly delivering the platform and technology advancements that become essential to the way we work and live. Some of the products that Intel has to offer include platform products, boards and systems, which are server boards, small form factor systems, aka Intel NUCs. They have memory and storage, which is like USBs. They've got connectivity such as Ethernet controllers, Wi-Fi and Bluetooth, and accelerators such as silicon products that can operate alone or accompany their processors in a system. Intel's 50th year was the most profitable ever in its company's history. In 2018, Intel's return on equity was 29.3%, the highest since the year 2000. An Intel record of $29.4 billion in cash was generated from operations. Although it has been almost 20 years since such a high return on equity, the past 5 years still had an average of 20% return on equity. Intel's success always depends foremost on its employees and its culture that delivers outstanding innovation and technology. Different perspectives from a diverse group will bound to make changes and adaptation possible. Robert Swan knows that with the expansion of a market comes new competition. Intel has missed some important milestones in process technology, which gave more opportunities to their competitors. Swan understands that in order to succeed in the future, they must execute their goals with excellence and at the same time, approach every day with a growth mindset.
Okay, so now we're going to talk about the SWOT analysis, which is basically strengths, weaknesses, opportunities, and threats. So beginning with strengths, there are 3 strengths that Intel possesses, one of which is the fact that Intel has a really strong partnership with Microsoft. This is a strength because Intel benefits from the wide range of CPUs made for Windows-based systems, which are basically Microsoft-owned. And all Microsoft systems need a CPU to function, and they use Intel CPUs for that. Another strength that Intel possesses is the efficiency that it has. The high efficiency of the production process allows Intel to gain advantage on its competitors. It allows the company to supply the processors to equipment manufacturers on time and in adequate amounts. And last but not least, the last strength that Intel has is economies of scale. This is a strength because the company's long history of making processor has led it to become more efficient at this task and basically have a lower unit cost, which competitors find really hard to match. For weaknesses, Intel is highly dependent on Windows. Without Windows, Intel has no manufacturer to supply its processors to, and it would basically be out of business. Another weakness that it possesses is the fact that it has no presence in the cell phone industry. Since Intel only focuses on making processors for computers, the company lacks in its ability to design a compatible processor for cell phones themselves. And last but not least, the last weakness is that there is limited diversification. Their products only do one job and for one system, which is basically bad. For opportunities, Intel has the opportunity to enter the cell phone industry and make processors for cell phones themselves. Since cell phones in today's society are really high in demand, they need processors to function on, and Intel can take advantage of that. They can also take a turn towards the drones industry and the automatic cars industry. Some threats that Intel has is the fact that it's really dependent, like I mentioned, on Microsoft. Another one is that its competitors such as AMD, they not only make processors, but they also make computers, and they're just a lot more versatile, and they have a lot more diversification compared to Intel. After analyzing the balance sheet using the horizontal analysis method, we have discovered that some asset accounts have increased from 2017 to 2018, as well as some liability accounts have majorly decreased from 2017 to 2018. And this basically has resulted in a larger amount of total assets and a lower amount of liabilities, which basically increases total equity. In the income statement, we have discovered that net income, net revenue, and cost of sales have increased significantly, and other accounts like gains on equity and provision for taxes have decreased, which has basically resulted in a net income increase of over 100% from 2017 to 2018. After using the vertical analysis method on the balance sheet, it shows the same trend as the horizontal analysis and basically shows that assets are a greater portion of total assets and liabilities are a greater portion of total assets from 2017 to 2018. And in the income statement, it shows revenue accounts as a greater percentage of net revenue and expense accounts as a lower portion of net revenue. In the ratio analysis, we have calculated the current ratio and asset test ratio for Intel, and we have figured out that if need be, Intel can pay off their current debts easily. Moreover, an increase in the earnings per share ratio from 2017 to 2018 by over 100% indicates financial growth. Overall, the financial position of the company is really good and is continuing to grow in the future. Now, comparing Intel to one of its competitors known as AMD, over a 1-month period, Intel's stock fluctuates while AMD's slowly climbs. And this is because Intel stock basically depends on Microsoft themselves. Without Microsoft, Intel can't supply anyone, and and without supplying anyone, there's no way that they could generate revenue. However, AMD makes processors for their own laptops, their own PCs, which are high in demand for gamers and or content creators. This allows AMD to steadily overcome Intel through its diverse products. Our overall opinion on Intel is that it's a great investment due to the factors contributing to its previous and current financial growth.